Okay, welcome to the Complex Podcast. I'm Katrina Greene, your host and SVP of Gray Residential, the property management arm of Gray Capital. And I'm excited today to talk about what we just said was not necessarily a sexy topic, but it is to my guest, and that's the best part. So let's get to it. I am welcoming Eric Rich today, and I don't know what these acronyms mean, CAWC and CIC. So maybe we start with you saying what those certifications are.
Sure. Yeah. The insurance world loves acronyms.
Okay.
These are designations. So the CAWC stands for a Certified Authority of Workers' Compensation. So pretty much just means I've spent a lot of time trying to understand work comp.
Okay.
And I love it. And then CIC stands for a Certified Insurance Counselor. So the CIC is one of the highest designations that you can get in the insurance business. Sometimes you get 5 years to get it done. You can get it done in a couple of years, but several different institutes that you go through. And so you can help, consult and guide clients.
Okay, noted. Well, I mean, I was going to recite them, but since I didn't understand what they were, I thought I better just ask. So Eric is with us from McGowan Insurance Group, and I think that I remember, hopefully I'm remembering this correctly, years ago I was on the ambassador committee for the apartment association here in Indiana, and new members, they always encouraged ambassadors to say hi to new members or, new people at the trade show. And I feel like that's the first time that I met you, was like this moment where I was like, oh, I need to go find McGowan Insurance Group. Where are they? And, say hello and, greet. And that's been, many, many years ago. But, before we get to what you do today, I'd really like to just hear about, Eric, a little bit about your personal life, if you're open to that.
Sure.
And then, just like how you got into insurance however many years ago.
Yeah. Well, I appreciate you having me. I love always talking about insurance too. So hopefully this will be.
We hate talking about insurance, but I'm glad you're here.
I know. I will say, most people say, hey, you make it a little more fun. So hopefully that's what we'll do today.
Absolutely.
So I'm married. I live in Pendleton, Indiana. Married to my wife, Ashley, for 17 years.
Okay.
We've got 4 children, Caden, Logan, Grayson, and Madison, 14, 12, 10, and 7. Born and raised in the Marklettville, Pendleton area. Single mom. I really never had a dad growing up. Most of the fathers that I had were really addicts and abusers, unfortunately. And so really it's just me and my mom, my grandma, and we were very poor back in the day. I lived with both of them. My grandfather had died 6 months before I was born, and my grandmother was a homemaker. And my mom obviously was working at Payless Shoe Source and Red Lobster. And so here I come, and they have to figure it out. So they both go back to college at the exact same time. Go to Ball State.
Wait, your grandmother and your mother went to college at the same time. I love
Both
this.
at the same time. They go to get their bachelor's degree. My mom went for teaching. My grandmother was in social work. And they both went and got their master's degrees as well. And so I got to watch them really work.
Yeah.
And, there was a lot of times that we didn't have a babysitter. So I would go to college with my mother. I would go to Ball State and sit in Pruis Hall and eat Oreos.
Okay.
And my mom always talks about the story about how she just looked up one day and she looked, and there I was walking down to the professor to give him an Oreo.
Oh.
So I learned a lot about hard work by watching my mom and watching my grandmother. And so as I was growing older, I kept thinking, I'm going to do everything I can to provide a good life for my family. And if they can work this hard, I can work that hard.
Yeah.
Right. So graduated from Anderson High School in 2003. Went to Ball State and studied business. Really didn't know what I wanted to do. I think it's really unfair for these college students to figure out what they want to do while they're in college.
I've got one right now. I've got a 19-year-old, and those conversations, and there's a great deal of anxiety around it. And I'm just like, look, and I tell her, kind of to speak to what you're saying, none of that. That class doesn't change your level of success. Your work does.
Right.
So whatever it is, it's not the wrong choice as long as you plan to work.
That's right.
So
that's a great way to put it. A lot of pressure on these kids, right? And so there's pressure on me. What am I going to do? I didn't know what I wanted to do. So I majored in business administration, and I'll never forget, my senior year, I graduated in 2007, right? So senior year, professor is like, you're going to get a job making $50,000 a year. And I'm like, oh my gosh, I'm son of a teacher, we come from nothing. And I'm like, this is awesome. And so of course I graduate, and what happens in 2007 and 2008, right? Everything
Rough
collapses, right? The real estate market and stuff. And I just remember going to people saying, hey, my professor said I was going to get a job. And they're like, well, everybody get in line,
Yeah.
So I'm trying to figure out what I want to do. I worked at I worked at Menards all through college. Loved it. I loved like just the people part of it, right? And serving people. And so I ended up going to work for the local hospital. They had a valet company that they hired. They contracted to run their valet. And so they hired me to be the manager. And I'm like 22 years old. I'm managing like 6 people my mother's age. This is totally different for me, right?
Yeah.
But I learned a lot about HR and operations and people. But all I kept finding myself was trying to sell the hospital more of our services because we did more than just valet. And I always loved like just revenue growth, right? And growing. So I ended up going to work for a copier company. And I'll save you the long story, but this company was out of Chicago. First time in Indiana ever. They didn't really realize how people buy in Indiana. It was literally like a boiler room atmosphere. So, I mean, shove it down your throat, do what you have to do. If you're caught in the office between 9 and 4, you're fired. You got to be out, cold calling, prospecting, banging on doors. My territory was downtown Indianapolis, and they would literally say things like, use the roach technique. So if they won't let you in the front door, go hang outside with the smokers and make your way back in with them. And I was like, this is crazy.
I've been in sales too, and I've never heard the roach technique,
my gosh,
but that's
this
funny.
Is crazy, right? So anyways, I was at a party with my wife, my fiance at the time. She went to dental hygiene school, and one of her friends was sitting there, and I was like, oh my gosh, I hate my job. And she's like, my dad's hiring. I was like, what does he do? And he's a State Farm agent. All I knew about State Farm is that I had him. And I said, sign me up. Let's do it.
Yeah.
And so this would have been 2009. I go to work for State Farm, a State Farm agent in Muncie, Indiana. Mike Wright, great guy. And I started selling home and auto and life. And I'd sit across the table just like this, and I would sell home and auto, and I would realize that nobody understood what they were buying. And I didn't feel like that was fair. I was like, people are spending thousands of dollars. I'll talk to my wife about this. Like, people are spending thousands of dollars a year, and they don't even understand what they're buying. That's why they don't like it, because they don't understand it.
Yeah.
Right?
That doesn't feel good.
No.
Yeah.
And so I found out that I had a knack for explaining it to where people could understand it. And they would say things like, no one has ever explained it to me like this. Thank you for doing this. And then I realized we created a good connection when that happened. And they were fine paying for the insurance then. Actually, they were fine paying more for better coverage because they understood it more.
Right.
So I was like, I want to do this, but I want to do it on a larger scale. And someone told me, you need to go to get on the independent side. I didn't even know what that meant, and go do business insurance. So I ended up going to work for an independent agency, and I was an account manager. I helped the salesperson. I supported them. And I learned a lot about being an independent and representing all the different insurance carriers and things of that sort, and learned a lot about business insurance. Then I went to go work for McGowan Insurance Group in 2012. And I became what we call a producer. So I would go out and generate business, bring in business, and be really a risk manager, provide solutions, find ways to help clients minimize their risk, and I loved it. And God was very good to me. I wrote a lot of business, and I became very good friends with the Ricker family. So they used to own Ricker gas stations. You remember those?
Yeah, I do. I remember that.
The Ricker Pop. Right, so that's Jay Ricker and Quinn Ricker, and I became friends with them. And I'll never forget, Quinn had me into his office, and I thought we were going to talk about Ricker's insurance. And,
right.
For like an hour and a half, he just asked me about my moral compass, where I'm from, all these things. It was kind of odd.
Yeah.
He has me in the next day, does it again. And then him and his dad took me to dinner and said, have you ever wanted to open up your own agency? And I said, well, at the time, I've got 3 boys. And I don't have any money, right?
Yeah.
And they said, well, that's where we come in. We think you could do something special. What if we backed you 100%? And so I went home, told my wife, I was like, listen to this. And it sounds like a no-brainer, right? You go do that, right? But I loved McGowan. I loved where I worked. I was the future of the place. My mentors were so wonderful.
Yeah.
But I said, I got to do this. I have to do this and try. So 2017, we started our own agency from scratch in February. We grew it to 17 people, $2.4 million in revenue from nothing. And Hugh McGowan was wonderful. He actually, when I told him I was going to do this, he says, this makes me sick, but I support you.
Aww.
You have to do this for your family.
Yeah.
I'll sell you your book of business, and I will even help you get contracts with insurance carriers. That is you don't see that in our business.
Yeah.
Okay. He could have easily said, see you later, kick rocks.
Amazing integrity.
Right. So then come 2021, we were part of the same organization called Keystone Insurance Group as McGowan. And so we saw each other a lot in the events and stuff. And in 2021, Hugh said to me, I want to talk to you after this. And he says, we're doing something really, really special. We want you back. We want you to merge your agency back with McGowan. We want you to be an owner with us, and we want you to lead our sales team. And so prayed about that quite a bit. The Ricker family was in full support of that, said, this is wonderful. This is exactly what we wanted for you. And so in 2021, December 31st, I merged my agency back with McGowan Insurance, became a partner with all of my mentors, right?
Right.
Which was so cool.
Wonderful.
And then I've led the sales team ever since. So I still go out, I have my clients book a business, and then obviously I lead the sales team. But I got into multifamily in 2013.
Okay.
Yes.
So that's been a while. It's funny, like in multifamily, most of the stories are how people fell into it, like without specific intent, where we might view like the insurance industry, like that it was very intentional, but like you're telling a story that's so similar to our world where you're just like, yeah, I mean, this person was at a party and then they said their dad was hiring. And I was like, sure.
Yep.
I mean, that's how it happens for a lot of people. And I mean, maybe that's also just a good lesson, like for our kiddos, just like keep your ears open, listen, pay attention, treat people kindly. Like it comes, it finds its way.
You are so right in that. I always say that single moment sitting by that couch at that party changed the trajectory of my life.
Oh yeah. Huge.
If I wouldn't have been in the insurance business, I don't know. And I love it. I
Yeah.
love advocating. I love helping people. And I don't know what I would be doing if I wasn't doing this.
Yeah. Interesting that you can like say like, oh, I just, I love it. Like we're over here, rates are increasing, we're looking at our properties just in a general sense. And, you have to make room for very specific things, taxes and insurance. And so, when things go up in that realm is when we, find efficiencies, sometimes sacrifices, depending on, what it is. Because these things are so critically important, and it's not like you can just be like, no, we'll take our chances. Like you can't do any of that. And so, I think because it's a relatively common topic on LinkedIn, like why are rates? I mean, other than the sort of general, just natural inflationary, like what does cause rates to ebb and flow a little bit? And you mentioned earlier today, which I love that. Like you said, people just don't understand it. Like you were mentioning, well, we didn't have a hurricane last year. And it's like, the thought process for us in Indiana isn't always necessarily like, oh, this is great news. There wasn't a hurricane anywhere in the country.
Sure.
How does that, and as, sort of like in a quick distillation, why does that make such a huge impact to us?
Yeah, no, that's a great point. So first off, when you talked about like, you guys trying to find budget for insurance, I get so frustrated sometimes when we have to deliver increases to apartment owners, because what I try to tell the underwriters, I say, listen, they can't just go sell more, right? Like their rents
a finite
are locked.
Number.
It's a finite. Their rents are locked. Their leases are in.
Yeah.
They have to find the money.
We
right?
do.
And that is such a hard thing. And sometimes underwriters don't understand that.
Yeah.
But why? Like, as I said, we had no hurricanes this year, right? Which is wonderful. And why is that important? Because here in Indiana, why does that make sense? Well, it's all a bucket. It's all a bucket of money that everybody's sharing, really. That's what insurance is.
Yeah.
So you have your regular insurance carriers. You have Cincinnati, you got Travelers, you got Liberty Mutual, the list goes on and on. But they also buy reinsurance, okay? So they're buying insurance too. So let's take an apartment complex that's $100 million. And let's say Travelers Insurance is insuring it.
Yeah.
They're really usually not insuring it for the full 100 million. They would have what's called an attachment point. So what that means is they're on it for the first 50, and then anything over 50 million, they're going to go purchase reinsurance because they don't want to foot the whole bill if that whole thing burns to the ground, right? You don't see them buy the reinsurance. They're doing that behind closed doors, right? And it's all calculated into their rate, okay? And so whatever they're buying the reinsurance cost for, they're going to push a lot of that down to the consumer, okay? So that's why some carriers will say, hey, we're going to be really competitive up to 50 million in total insured value. After that, we're not going to be competitive because we have to go buy reinsurance, okay? So the thing is, there's only a handful of reinsurance carriers out there. So all the Cincinnati, the Traveler, they're all buying from those reinsurance carriers. Well, those reinsurance carriers sell reinsurance to all of the people along the coast, right? So as the hurricanes come in and have just obliterated everything, that's getting into the reinsurance, and they have lost money significantly over the last few years. So when they lose money, they're then going to raise their rates to the Cincinnatis and the Travelers and the Nationwides and Liberty Mutual, who then raise their rates to you guys, to us, the consumers. So that is why not having a major hurricane event is good, because the carriers are working on what's called their reinsurance treaties right now for the 2026 year. So they're communicating, they're negotiating with the reinsurance carriers. And hopefully the reinsurance carriers, they should have done really well last year. So those treaties should be favorable, which gives, that's more affordable for the standard carriers, which should be more affordable for the consumer.
What is really well? Like in terms of those margins, if you're able to share some of that.
Well, let's put it like this. Let's go from like a standard carrier.
Okay.
So a traveler's insurance, for example.
And I'm only asking this because I think perception, no different than when someone rolls on our communities, they think, oh, they're raking in millions.
Yeah.
That is not always the case.
You're correct.
And I think that there's a reason to talk about it in insurance too,
Absolutely.
maybe.
So every year we're talking to the insurance carriers about what is your combined loss ratio. Okay. That means what, for every dollar you're taking in premium, how much are you paying in claims?
Right.
That is a really big, distinguishing thing to figure out how are they performing this year, right? If they're a stockholder company, they're being watched significantly, what that looks like. Yeah. And then we're watching that too, because we'll know what's their next year going to look like from a premium standpoint. If they're losing a ton of money, then their rates are going to go up a lot. A good loss ratio combined for an insurance carrier is about 95%, 94 to 95%. So that means for every dollar they collect in premium, they're paying 95 cents in claims. That's usually a good year. And people go, well, that isn't, if you're a business person, you realize 5% doesn't sound like a lot of money, right, from a profit standpoint.
Yeah.
But 5% on billions of dollars is good.
Yeah.
But also insurance carriers, they're investing the premium, okay? So the day that you pay your premium, by 5 p.m. it's invested by some real smart person, right? Way smarter than me. And
or maybe not even a person these days.
That's right, AI, right?
Yeah.
So that's called float. So they're floating the premium in the stock market, and they're earning investment income, right? So yes, a 95% loss ratio doesn't sound good, but they're also doing well over here. So they're going to be in good shape. Carriers will actually say, this is what people don't realize, it's so important. They will, if their loss ratio is too low, if they're like at 87%, they will actually say, our premiums are too high. They'll say that.
Really?
Yeah, they'll say our premiums are too high, because we shouldn't have this much loss ratio. That means we're probably losing out on business.
Right. So they're looking at it more from an opportunity cost perspective. Yeah.
And so then some people will, I know we'll get into the hard market, but like when carriers were getting like just destroyed for a while there, and they had these terrible loss ratios, they were like 110, 120, 130. That's huge. For every dollar they're collecting in premium, they're paying $1.30 in claims. That's not sustainable.
Yeah, most businesses have to close up shop when that happens.
The response I would get sometimes is, well, they've got billions of dollars in reserves. Well, they actually have to. If they don't have billions of dollars in reserves, they could be downgraded by AM Best. AM Best is looking at their financials all the time to say, do they have enough money to pay their claims? Because if they don't, they'll go insolvent, right? Which is a big deal. And carriers go insolvent quite a bit. You just don't hear about it, right? You don't hear about Travelers isn't going insolvent, but there's thousands of insurance carriers.
We don't hear about it because it's just not widely, like it's not public information.
Exactly.
Or
there's several carriers in Florida that went insolvent. That's why it's very hard to write business in Florida. A lot of carriers don't want to do it.
Honestly, like we looked in Florida, there was. It's been a while, maybe like year and a half or something like that. But, at the end of the day, insurance was a huge part of the reason that it was just like, nope.
It's a huge deal.
Nope.
Yeah. A lot of people are just going without wind coverage. We got a lot of guys that have high value homes down there.
Yeah.
And they're like, I'm not paying for the wind coverage. Like, I'll just repair the roof if something
happens. Take my chances, I guess. Yeah.
Yeah. It's really hard.
You said hard market. So maybe can you explain that a little bit better? I think there's people that are new to the term. I was new to the term until I heard you speak actually recently. Yeah. So let's bring everybody in on that.
You're just bringing out my inner insurance nerd, right?
This is what you're here for.
That's right.
That's why we brought you.
So it's funny, when I got into the business like 16 years ago, I always heard about the hard market in the 80s. Right. I was born in 85. The hard market in the 80s, like they were saying things like people had to tear off their diving boards because carriers wouldn't even insure if you had a diving board.
Listen, I used to have a diving board and I don't anymore.
Yeah.
So
I do, and I'm an insurance agent. I do. Yes, I do.
Someone told me they wouldn't put it back in. Like we had new concrete put around it, and they said that they wouldn't put it in because it didn't meet current requirements or something like that. Could have been a load of crap. I have no idea. Again, here we are. I don't know. I just know that I do feel safer sometimes when my adult friends are over and have had a cocktail or two.
Yeah.
Like no one needs to do. Yeah. Anyway, sorry.
We do these things called float nights.
Yes.
And my friends will come over, and the kids are great on the bait diving board. But when a couple of my buddies get on there, that's when I get worried.
Yeah, they're like, let's do a front flip, and I'm like, you haven't done that in 20 years. Why would you try today? Why is today the day? So
I was a diver in high school, and I don't do that stuff. Okay, I'm an insurance guy. I know what's about to happen. So.
Okay, sorry. Back in the 80s, hard market, no more diving boards.
So anyways, you have a hard market and a soft market in the insurance business. The easiest way to understand that is that hard market means insurance premiums are high and insurance is hard to get. In a soft market means insurance premiums are low and insurance is easy to get. Okay. So again, we talked about the loss ratio, right? If carriers have a good loss ratio and they're making good money on the investment side, right? And they're not having a lot of claims, they want as much premium in the door as possible, right? Because it's doing well on the investment side here. We're doing well. So
winning.
Right. Yeah. So it becomes a soft market, which means their appetite becomes much more broad. So they used to do plumbers and electricians. Now they'll do plumbers, electricians, drywalls. They want as much contractors as possible, or what have you. Or now they're opening up to apartments. We want to write apartments too. Yeah. Bring it in the door. We want the premium in the door. That's a soft market. When those carriers see those loss ratios creep up to 1, 1.5, 1.10, and the stock market's not doing as well, and it's volatile. And if you notice, over the last few years, it's been good, but then volatile, right? So they don't really know what it's going to do.
The predictability, yeah.
Correct. So that becomes a very hard market. Well, this market that we just were in was one of the hard. I mean, we have people in the business been there for 45 years, and they're saying we have never seen it this bad, ever. And obviously, I focus on multifamily, and that was one of the hardest areas. Property was the hardest market we had ever seen. So how did we get to the hard market?
I was going to say, like you mentioned just a moment ago, like sometimes people just don't, like they just choose industries that they will or won't.
Correct.
Are we particularly risky? I mean, I would believe that we are. Nature of what we do, you know what I mean? Like, I don't know.
In our business, you're referred to as HAB.
Like
habitation.
Yeah.
So a carrier will come in, hey, what's your market for HAB right now? And they're like, ugh. Like that's how they got for a while. Because if you go back to like 2016, 17, and 18, like everyone would write apartments. They all were about it. Yeah. Everybody. And they loved them, and they want them all. And you could get $250 a unit. Like you'd see on the OMs, it's like $250 a unit. And you're like, oh yeah, we can absolutely do that. And you can get even lower. Well, they realized they were drastically underpriced. Okay. And so what happened is a lot of the older buildings, the 60s, 70s, 80s garden style frame apartments, unsprinkled. Going up in smoke, having electrical issues, roofs blowing off like crazy. Yeah. Right. You know.
But for the record, my second highest claim ever was from sprinkler lines.
Oh, there you
freezing.
go.
So all I'm saying is, but I understand it from a safety perspective and what that looks like.
Yeah.
Just saying.
Well, they started doing, obviously, insurance people are the best at statistics, right? And research. And so they started looking at where are our losses coming from. And it was property, old property. Okay. And so,
same.
So long story short, what happened is that actuaries are crunching numbers for insurance carriers all the time. And what they're saying is, here's our expected losses over the next 2 years. They can actually look at historic data and say, we expect the losses to be X in the next 2 years. Here's the rate you need to charge to make sure you can still make money and still pay your claims, right? Well, what happened is nobody expected the amount of inflation we were going to have, right? It went through the roof. If you remember building materials, it was just insane
everything,
after COVID, right? And cars were like 60% more to repair than what they were expected.
Yeah, I had to buy a car during that time. When my daughter turned 16, and then I had one that I drove as long as I possibly could, and I was like, this is horrible. There's no residual value in this. Not that there is a lot in auto anyway, but I'm just saying, like, I bought 2 cars at the worst possible time.
The worst possible. And so you saw how expensive it was.
It was horrible.
Right?
Yeah.
It was awful. So the problem is that the insurance carriers were charging a rate based on what they thought those losses were going to be. Well, inflation took that and said, see you later. That's out the window. Yeah. Right. So we would have these fires that would normally be a $500,000 loss, and it'd be $800. 900. So these insurance carriers saw their loss ratios just go up and up and up and up. We actually had one insurance carrier who used to write apartments, I won't say their name, they posted a 147% loss ratio for the whole year, which was
Ouch.
absolutely brutal.
Yeah.
Brutal. So they actually, knee-jerk reaction, they said, we're no longer writing apartments. We're no longer writing lesser's risk, older property. We're getting off all of it. And I had millions of dollars of premium with them in apartments, no losses at all. And they're like, sorry, we have to get completely out of the line of business. We're getting off of it. So what we saw on the hard market side, the consumer saw emails from their agent, hey, premiums are going up, prepare for this. Hopefully they did.
Yeah, right.
Because some agents, I think, were showing up on the day before going, uh-oh, we got a problem.
Yeah.
What we were dealing with is just the constant non-renewals. Carriers saying, we're getting off of this. Why? Because we're losing money in this class of business. Well, yeah, but this one's profitable. We don't care. I'm sorry, but we have to make changes. And then we were forced to then go market that business to other carriers in a hard market.
Yeah.
Where carriers knew, hey, that we can get premium on this because everyone is.
Because no one else. Yeah.
Everyone is doing it, right? And it just became this huge problem, right, for everybody. And it was probably one of the hardest times for us. We were working 50% more, right? Because a lot of times you don't want to market your business. If you're with a carrier, you want to stay with them for a little while, right?
Yeah.
As long as the rates are competitive, they're not seeing these drastic increases and changes, you want to build equity with those insurance carriers. That is a huge, there's something called an insurance score. If you jump to carrier to carrier to carrier to carrier, the carriers see that. They see the loss runs and they realize we're only going to have this client for probably a year or 2 years.
Yeah.
So we're going to charge a higher rate.
Right.
Versus, hey, this client's been with this carrier for 10 years. If we win it, we're probably going to have it for 10 years too. Let's give a little bit of a better rate.
Yeah, some loyalty there.
Yeah. But what happened is the rates were just going up so much, we had to start shopping.
Yeah.
But then there were times where we actually had to put a floor. If it's not more than 15%, we're not shopping it because we knew we couldn't even get it somewhere else better.
Right.
And then
did the carriers know that threshold
I
too?
think
in theory,
but eventually I think they did. But it was just we didn't have no agency out there had the manpower to do it. Right?
Yeah.
They just didn't have it. And then the homeowners, if you look at your homeowners policy, anyone listening, go look at your homeowners policy. In the last 3 or 4 years, it's probably went up 60 to 70%. Yeah. Right? Literally, at least. If you got a kid, 6, 7, right? I don't know that stuff, right?
Look, I'm aware.
Yeah. Every time I hear it, my gosh, it drives me crazy. But if you look back at that too, they also, what changed a lot was replacement costs. So let's say you had a building that was $1 million. When it came up for renewal, the carrier would say, hey, inflation's crazy. We did our replacement cost estimate. This building's $1.6 million to replace. And now we're going to charge you the premium for that. Yeah. And so the clients, the consumers would say, "What? This is ridiculous." And I get it, and I understand both sides. We would try to navigate that and work, but that's what that hard market was. We're still in it. We're starting to come out of it. We're moving into more of a softer market.
How long does that take? Are you saying, 2027? I mean, obviously, we've wrapped up 2026 budgets, so it's is 2027 going to get better? 2028?
I think so. I like to think positively. So we would have these people come into our office and they would say, this hard market's not going to change, guys. It's just going to be here forever. And I would say, I don't believe that. Yeah. I don't. I said, all it's going to take is 2 of the big carriers to turn the faucets on and say, we want to write business. Yeah. And everyone's going to have to follow suit. And that's what's happened. We're starting to see that. Now, it's not as much in the multifamily. We're seeing those, instead of having a 30% increase, we're seeing 8, 9. Okay. It's getting a lot better. Right. Okay. As far as the other types of lines of business, we're seeing carriers, they're out. They want to write business. They're very hungry. They want the business in the door. So I told everybody this soft market's going to actually be harder on agents, better for consumers, right? Okay. So I think a soft market is coming. Will it ever be real soft on your 60s, 70s, 80s garden style frame? That's a challenge. It really will be. But the terms and conditions are not going to change. Those 1% wind and hail deductibles, they're not going anywhere. We're all going to start seeing that on all the buildings and stuff like that too. But I think there is some positive on the horizon. There's some good strategies that the apartment owners can be doing to prepare for that and find savings and better terms and conditions in the next 2 years for sure.
Well, let's talk strategy a little bit because, in my exposure, I never had to or never got, was never able to, I don't know however you want to look at that. I was never the closest person to the insurance agencies, like the policies, the carriers. as it relates to like the purchasing of the policies where I was before and even today here at Gray. However, when something happened, I was then the point person
The claim.
for the claim. Yeah. So just compiling everything. And, a lot of it is just like everything else, like, evidence based. And, depending on what it was, like you're getting a lot of questions on what your policies are, what your rules are, like, what does this look like? How do you prepare for these things? How do you mitigate these things? So are you able, maybe to tell us just as operators, it always feels like it's probably such a small effort and maybe like, oh, it's not going to impact your rates, that much. But like you spoke one time about like just the roofing plan, are there 3 or 4 things you can share with us today that, we can sort of like take back to our desk and go, okay, we kind of have this policy and kind of have that. I mean, I think we all have rules and policies, but I don't.
Are they all written down? Are they all organized?
Yeah, and whether it's roofing, we talked about snow removal this morning because it's been snowing in Indiana, which is just I hate it. I think it's just beautiful, but
It is beautiful,
I come to the office and so like I deal with the people and I'm so nervous about my car. I'm always like, no one touch my car, like get away from me. But just tight operations, like what we can do in operations that we can present that actually makes a difference.
Yeah. So let me explain something, and it's called scheduled credit.
Okay.
And then we'll go into why you should be doing these things.
Okay.
And why they can help you.
Scheduled credit. I'm ready.
Scheduled credit. If the only way to change your premium, if you get a personal lines quote, your home and your auto, for example, the only way to change the premium is to increase coverage, reduce coverage, increase deductible, reduce deductible. That's it. It's very black
That's
and white.
all we have.
That's right. I can't go to
the only lever.
I can't go to the underwriter and say, hey, look, Katrina is awesome. Like, I know how great of a person she is. Like, seriously, she's got a daughter. She drives safe in the car. I mean, she could say, that's great. Here's the premium. I can't. She has no authority. That underwriter has no authority to do anything.
Yeah.
Commercial is much different.
Oh.
They have what's called scheduled credit. So each underwriter is given scheduled credit, which says, if you think this risk is worth it, you can apply credit to the premium and get the premium down lower. Okay. Right. So it's the same as me calling and saying, hey, Katrina's really, really good. Can you give her some credit? Right. Okay. Seems like you know her. Let's give her some credit. Right.
It's sounding very rebate-like.
Almost.
Like, does it come at the front end or is it the back?
So let's say the premium is $100,000 for the apartment complex.
Yeah.
And I call. And I talked to my underwriter. I'm like, listen, I've got a great relationship with this insured. Okay, they're a member of the Indiana Apartment Association. They're at everything. They're at the industry summit. They're a very well respected operator. Okay. Also, they have a written roof maintenance plan. Here it is, right here. They also here's their maintenance plan for this. Here's this. Here's their employee manual. Here's all the things that they have in place that are going to help prevent and mitigate a claim. Okay. Yeah. Also, just to let you know, their maintenance team does a daily sweep of the property, looking for any type of, risks that could, hazards that could cause a claim. Blah 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 blah. Yeah. That underwriter goes, okay, I feel better about this. Okay. You know what? I'm going to apply 15% credit. Okay, so now the premium
15%.
Now the premium's $85,000.
Yeah.
Right. Some underwriters can have up to what's called 50% scheduled credit.
Yeah. Now, so it can be that meaningful.
Oh, yes. Yeah. And it can be huge meaningful. Yeah. And the problem is that a lot of people in our business, they'll get the quote from the carrier and they'll say, here it is. Mm-hmm. And I will tell you, hopefully no underwriters are listening to this. I think they curse me at night. I know they do. Yeah. Because I am fighting for my client as much as possible. When I bring my client something, it is the best. Believe me, I beat the underwriter up and they're exhausted. They're probably ready for me just to go away. I know it.
Maybe they give you what you want to get you to go away.
I believe that. I just don't give up. I just keep asking and keep asking, right? I'm very persistent. Ask my wife. I'm very persistent, So like if you look at not giving them anything, to give them a reason to apply the schedule credit. Here's why you have to give them a reason. Mm-hmm. Because all underwriters, they can have their files audited. So if they have a claim, their file will get audited. Mm-hmm. Okay, so let's say that we work with the underwriter, we place an apartment complex, fire happens. Their boss will usually pull the underwriting file and they'll audit it. And they'll say, okay, we had a big loss here. Let's see what we were really on. Yeah. Okay, it's an 80s apartment. Looks like the electrical was updated. There's 15% scheduled credit applied. Hey, Mr. Underwriter, why did you do this? Yeah. Here's my documentation. Right. Here's all the things that they're doing Okay, that makes sense. I can see why you did that.
Yeah.
Same scenario. And he says, where's your documentation? Why'd you do this? I don't know. I was just trying to win the business. That's not good. So the underwriters won't do that.
Yeah.
You got to give them something to give them a reason to credit the business.
Yeah.
Right. And then so like our strategy is I'm going to do that initially, and then I'm going to go back again. Hey, this is also what they're doing too.
Hey, what about this?
I need a little more.
Yeah.
I need a little more. Right. And you just keep pushing it down. But if there's no reason, if there's nothing, if you can't give them anything, they won't do it. They're going to send out, you got to think about it, they have goals too. These underwriters have goals. They have rate goals, which means they want to get an average of 7% on their book of business of growth throughout the remainder of the year. Some people are going to get 15%. Some people are going to get 3%.
Right.
You know, you got to make sure that you're the ones getting the 3%. Right?
Yeah.
You know, and so you've got to give these underwriters a reason to apply that credit. Right. And we're seeing that more and more become, during the real hard market, it was really hard. I mean, people were like, I'm sorry, this is it.
Yeah.
Now we're seeing them open up. They're being more flexible, right? So again, the things that you're doing at the property level, everyone needs to have a written roof maintenance program.
Yeah.
Okay. What it tells the carrier is that you're looking at these roofs every year, constantly. You're looking at them, maybe have a roofing contractor come once a year, look at everything. After storms, you're getting up there, you're having a roofing contractor take a peek and look at these things, right?
Yeah.
Because their biggest worry is that this roof's going to sit up there with a leak, right? And
Yeah.
no one's going to know about it. And when do you know about it? After the claim's occurred, after the water's been in there forever, right?
Yeah.
So that tells them, okay, the chances of us having a roof claim here, a water claim, is going to be a lot less because they've got a roof maintenance plan that they follow, okay? And it looks like everybody's doing it. You know, they're going to want to see what type of logs do they keep for snow removal, right? Are they keeping logs every day? We talked about this earlier, that in the state of Indiana, there really is this inherent risk that we live in Indiana.
Winter.
Yeah, it's going to be slippery. It's going to be slippery. It is what it is.
Yeah.
And underwriters know that. Attorneys know that. It's true.
Yeah.
So what they're looking for is like egregious, not giving her the snow.
Right.
You know, if you're like, hey, you know, we have a log here that 45 minutes before the slip and fall, we shoveled all the sidewalks.
Yeah.
Yes, we put salt down. There was one patch, I guess, that didn't get melted.
Yeah.
What that does is it limits your liability. Okay,
Yeah.
it brings it down a little bit. So if we do have a claim payout, okay, it's not going to be this egregious, well, they just didn't do anything. Look at the log. There's no
severe
logs.
negligence.
Yeah.
Yeah.
So, you know, egregious negligence, right?
Yeah.
So again, having that log so that I can go to the underwriter and say, look, here's their logs. This is what they do when the snow comes out. Let's say that you guys don't do it yourselves.
Yeah.
They contract it out.
Right.
One of the first things the carrier wants to see is that contract.
Oh, of course.
They want to make sure
invoices.
that the risk is being transferred to that contractor,
to
right?
their policy.
Correct. And it's very important in that wording that there is hold harmless wording in there.
Yeah.
That you are transferring the risk, that you are obtaining a certificate of insurance, making sure that their policy is enforced, that they have the right amount of. And so when I go to the underwriter and say they get certificates of insurance from their snow contractor, they do this, it makes them feel all warm and fuzzy. And a warm and fuzzy underwriter is exactly what we want.
Yeah.
They feel good about it, and they're willing to give more credit, and they're willing to improve the terms and conditions. I could say, can you give me a better deductible? Can you do this, right?
Yeah.
All of those things you're doing at the level, and there's a million things that you guys can be doing.
Yeah, I was just thinking, well, definitely on the snow removal side, you know, I had one time, and there's a video in addition to the logs, and we created like we used our facilities app to create a custom inspection.
Mm-hmm.
And the inspection was snow before and snow after, basically. So the before one was like pretty fast. You know, we weren't trying to belabor and say like, go take a video of the whole community. It wasn't like that. It was just like, let's document conditions before, and then let's document conditions, you know, after through photos and closing it out. And so it was really fast and easy to produce when we had something happen.
Yeah.
But we had video footage at one community where we had to slip and fall, and the person that fell had a heart attack. And, you know, so we're talking about just a litany of things at that point. And in the video, you know, you can actively see seconds before this person fell, Bob's out there doing more salt on an already relatively clear sidewalk.
Sure.
Like, we may have been oversalting it if
Right.
there is such a thing. There is. But it was a tough situation, because obviously there's the humane side of you that just says, gosh, I hope that we didn't play a role in this,
Sure.
but like, you can see in that video someone else right next to that space getting their groceries out, walking all around. I mean, this person walked around the vehicle multiple times. I thought, wow, when are you going to get your groceries in? And you can see it's not slick, and you can see people moving at a normal pace. You can see people walking to the fitness center at a normal pace. And then this happens.
Yeah.
And I mean, I don't know if you can speak to this or not, but like, in that situation, I think we did the best that we could do between the preparedness, the logs, the video showing the efforts, the video showing other people moving freely, et cetera. But like, all those things, like, how do we package that up for you to go help us get these scheduled credits? And do those things matter? Do cameras matter?
Oh my gosh. They're the best thing you can do.
They're the best thing you can do.
Best thing you do. So,
okay.
I told you Rickers, right? I've known
Right.
Rickers forever.
Yeah.
If you talk to Jay, like, when they put cameras in their stores that people walking in and out, it was the best thing they ever did, right? Because
from a preventative measure or from an insurance?
From an insurance standpoint. Because like, there are people, slip and fell, claim slip and fall, and they're like, we did nothing. There was nothing standing here. There was nothing this. You fell on your own accord, right?
Which happens.
That does happen.
It does.
Just because someone falls on their own accord, you guys didn't have a curb that was busted up. You didn't have a handrail that didn't work. It just happens, right?
Yeah.
You shouldn't be found liable for something like that.
Right.
So showing that on video is great. What I recommend is whoever is your insurance person, either that person or maybe they have an assistant that can say, hey, we need you to build a file. And this file is going to be all of the good stuff we're going to share with our underwriter, our agent. All the things that we do that show that we are a responsible property owner that care about our people and care about our buildings.
Yeah.
And here's all the stuff that we do. And one of the most important things you can do too is on your statement of values is make sure that your properties are all updated with the year the electrical was updated, the year the roof was updated, the HVAC, and the plumbing. That's the 4 first things they ask us. When was the roof replaced? That's all they want to know, right?
Yeah.
And all these carriers have AI now, and they're like looking at your roofs, and they're taking pictures like every 4 months.
Yeah.
Boom, boom, boom. And they'll go back.
I've heard of that.
Oh, the roof looks like it's going down. But when we can say, well, that's what that shows, but I just heard from Katrina, they just replaced the roof last month on this property.
Yeah.
Boom, changes everything, right?
Yeah.
You have an electrical box change, like put that in there. They need to know, your carrier needs to know that. And your agent, your broker should be asking those questions like, hey, what are you doing to the property? Any updates that we've done to this property?
Yeah.
Right? But
I'm just like writing down, the software that we use, there's an opportunity to just add tags.
Yeah.
And I wouldn't say that we use it probably like we should, but like, I'm writing that down because honestly, like, some of the service requests that we do throughout the year, we're probably not articulating the importance of some of those updates that, come up. And if we just added like insurance as a tag, then we could just go in from a portfolio level, pull things with that tag.
Yes.
And then when it's time to start having those conversations, there may be something to present. There may be something that we could be presenting.
And we do that on our end. So like, as our insureds are telling us, hey, we did this, we're building that file too. So that if we have to market it to a new carrier,
right,
we already got all this information.
Yeah.
Like, hey, they did the electrical last year, new roof 2 years ago, this and this and this. And another thing is really important is that when a claim occurs, because it's not if, it's always when.
Always.
It's always going to happen, right?
Yeah.
When a claim occurs, there needs to be a team that meets and talks about it.
Yeah.
What happened? Why did it happen?
Yeah.
And how can we prevent this from ever happening again?
Yeah.
And then doing something. Now, writing something, it could be as simple as, well, this person slipped and fell over here in the night. Well, you know what? It is kind of dark in this parking lot.
Yeah.
We need to, let's add a couple more lights to this.
Right.
And what that is called is corrective action.
Yeah.
So the underwriters get the loss runs and they go, Eric, talk to me about this loss. What happened here?
Mm-hmm.
And I'll say, well, they had a resident come outside, slipped and fell. It was a little dark. And after the client realized that, they added 2 more lights. It's very lit, shouldn't have that issue at all. Boom. They will literally mark that in the file. So if they're audited, they can say, well, they already had corrective action for this. We should be fine. That helps with the scheduled credit. That helps with getting more carriers to want to do it.
Yeah.
If they go, what did they do since then? I'm like, nothing. then they're going to go, okay.
Parade.
Yeah,
it doesn't happen again.
It's going to happen again, right?
Yeah.
It's not a lit parking lot, so it's going to happen again. So they're going to say, I don't want to be on that one because I know that's going to be a big one, right? So that is
I
really
think
important.
we've done a lot. I mean, just when I'm thinking about through the years, but again, it's like, this is where if the property management team isn't, or someone from the property management team isn't at the table to hear and also to articulate, like, but we do this and we do this, we do this. Like, we had a community one time that, just the way that the drainage was, it was common that in this one particular area pretty much on each building or building type of that, if you will, like the water always would drain and then refreeze in these very specific, places. So really it just ended up being like, well, we need to bury that. When we can. Obviously you can't do those things in dead of winter, but it was like being cognizant of the conditions that we knew were going to happen and saying, we want to fix this, aside from just water intrusion not being anyone's favorite thing, but Joe Powell, our vice president of facilities, like identifies those things and is like, no, we need to fix this for this reason.
Yeah.
But I wouldn't say that that information got pushed up to the president at the time, who was the one sitting across from the broker or the whoever was representing
and then what
the
happens
agency.
is it goes by the wayside for years, right? And it never gets communicated that this client took corrective action on something they weren't required to do. So you'll have loss control come out sometime. They'll visit the property. The carrier will send out
Yes,
loss
we had
control.
one yesterday.
Yeah. They'll come out
in South Bend, Indiana, where there's a bunch of snow.
Oh yeah, we got an office up there.
Yeah.
And so they'll come out and they'll list a bunch of corrective actions they want you to do now.
Yeah.
Yeah.
I've seen some of those.
But being able to go, because they'll say, hey, we've got cracks over here. They need to fill this. Or we see a couple shingles flipped up. We'd like to see you fix that,
Yeah.
When you can go to the underwriter and say, they noticed this and they did this. Like, a loss control rep wasn't telling them to do it.
Yeah.
No one was telling them to do it.
Yeah.
They did it themselves because they care about people. They care about their properties, right?
Yeah.
Which shows that they're going to be a good risk, right? And, what property owners can be doing, and I'm going to give you guys a look behind the veil of what happens on the underwriter's
Please
desk.
do.
Okay?
Yeah.
This is really important. If anybody takes anything from this is the most important thing.
Okay.
Underwriters are so slammed. They're busy. They're getting hit with submissions. They've got renewals they got to get out, and they've got new business coming in. They are so busy, and I get it. They're great people, but they can only do so much.
Yeah.
They have on their desks A stacks, B stacks, and C stacks. Okay, A stack is accounts they know they can write, and they want to write them, and they've got all the information, and they're going to give them the first priority. B stack is if they get done with their A stack, they'll take a look at B. Okay. They're never touching the C stack. Oh. They're not doing it. Where are you on the underwriter's desk? Are you in the A, B, or C? My goal is to always make sure my client is in the A stack. And
how do we even know?
Right. You don't know. You don't know. And a lot of brokers, unfortunately, they don't know. But there's a way to do it. There's a strategy to do this. Really, underwriting is all really subjective. Okay, it's a person that's sitting at a desk that's evaluating a risk to decide, should we insure this person or not. Same thing as a bank underwriter.
Same thing we do when we're buying a community.
Correct.
Yeah. Should
we do this or not? What are our risks? All these things. So how can we make them feel better about it? Well, it's all about telling the story. So, in this business, like I said, I lead 60 salespeople.
Oof.
And I'll tell them, I'll say, guys, the hardest thing that you're going to do is not selling the product to the client. It's selling it to the underwriter. That's the hardest sell you're going to have.
Yeah,
here.
you have a lot of duality there, like where it's like, obviously step one, get that relationship. Step two, make it turn into something.
It's way harder to sell to the underwriter. It's unbelievable. We're beating our heads against the wall sometimes.
Yeah.
So what you have to do is you have to have we call it submission health. Okay, so if Gray Capital came to me and said, hey, we've got a new property here. We need to get a quote on this. I don't like to say quote. I like a solution. We need a solution on this.
Okay.
Phonetics.
Linguistics.
I just don't like
words
the word
matter.
Quote. They do.
Yes. Let's find a solution.
Eric, we need a solution for this one. Okay, perfect. So have you ever seen a certificate of insurance?
Yes.
Evidence of insurance. It'll say Accord.
Accord form.
They're Accord forms.
Yeah.
These are universally accepted forms that are communicated between insurance agencies and carriers all day long.
Yeah.
Okay. When we take that property, we're going to call it, I don't know, let's call it Cedar Crest, right?
There's probably 100 of those.
There's 100 of them.
That's perfect.
We're going to call it Cedar Crest.
Yeah.
Eric, we're buying Cedar Crest. We have to take all that information and we have to transfer it to what's called an Accord submission. And it is If you read it, you would want to just gouge your eyes out. It's
Okay.
so boring, and it's got the property, it's got the year build, it's got it takes forever. I mean,
Yeah.
it's a long time.
Yeah.
And that goes to the underwriter.
Mm-hmm.
If all we did was put Cedar Crest in that Accord submission and shout it to the underwriter, it's sitting on their desk.
C-stack.
Oh yeah, they're like, oh my gosh, another one. See
you later.
And this is a 30 day. They want this in 30 days. I don't have time for this right here. And they'll just say, I'm sorry, this is we're not a market for this. That's what they'll say. They want to get off it really quick, right? Versus what needs to happen is you take Cedar Crest, you get the OM, you get the history of the property, you talked about who the property owner is, all this stuff. You pick up the phone, you call the underwriter. Hey, John, listen, I got a great property here. I've got a great opportunity. We're the ones that's controlling this. I really want you to get excited about it. Building's built in the 90s. It's got a new roof on it. It hasn't had any claims in the last 5 years. My client's buying it, okay? And they're going to do this. When they go into it, they're actually going to update a couple of these other things too. And you say, I'm going to send you everything, and I'm going to send you a good cover letter, okay? And so you're going to come through here today, and I'm going to have a cover letter. So that cover letter, just talks about all the wonderful things that you guys do. All right. It's going to include your roof maintenance program. It's going to include, your logs, all the stuff that you do. So then when it hits his desk, he's like, okay, I know that this agent is going to control this.
Yeah.
Right. So I'm not going to be fighting a whole bunch of people on this.
Right.
It is in our appetite. Sounds like a really good one. They called me, got me excited about it. They're expecting me to do this now. It's going to go to the A stack.
Okay.
And then what happens is 2 days later, I follow up. Hey, I know you don't have the quote yet, John, but you got everything you need. Is there anything that you need from us?
Yeah.
Right. And he'll usually reach back. No, I think we're good. I'll have some questions here in a little bit too. You need a supplemental application? I'll get it done for you right away. Because they'll send out supplemental applications sometimes to agents, and they'll say, we need this done. Well, weeks will go by and it's not done. It'll go right to the C stack, right? They're busy. They have to move on. So we've always got to get that to the A stack. So providing your broker with as much information as possible on whatever risk you're going to insure is the best thing that you can do. Loss history, all the updates on the properties, everything, because the underwriters have to have it before they move on. They won't even start on it sometimes if they don't have all that. So it's just sitting there and sitting there.
I think that makes sense. Is the cover letter because the Accord form doesn't really allow for some of the nuance?
Yeah, the cover letter is just, it's all basic information.
Yeah.
Guys, I could send you a submission.
But the Accord form doesn't have do you have a roof plan? Do you have this? Do you have that?
It has a couple questions do you have a safety plan and stuff like that. But to be honest with you, it's buried in it.
Right.
So we always say a cover letter that introduces the client, talks about all the great things, explains the losses. So if I have a loss on there, a couple losses, I'll explain them. I'll say, we had a slip and fall here and here. Since then, they've replaced the step over here. They realized it was a brittle step, blah, 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 blah. Roof maintenance does a sweep on this. Showing the corrective action. Or sometimes there's just like a fluke accident, like this was a fluke accident.
Yeah. Can I challenge you to explain cover letter style a claim where a single individual over the course of a day or two, but we have a lot of it on video, cut over 100 AC lines, copper lines to, the air conditioners. This is an older community, line sets. We ended up having to replace, I think 105
That's expensive.
air conditioners and furnaces. How do you how do you explain that?
So
cover letter style. I mean, we had it on video. Law enforcement was obviously involved. But I mean, what in the world can you do? What can you do? How do you explain that in a cover letter?
Well, what have you done? What have you done since then?
We could bring Joe. If Joe wasn't in the middle of a maintenance supervisor meeting, I could bring him in and, he could talk about it. But let's just say it's, super fresh or, maybe we haven't had a chance to do cages or, whatever. But I mean.
What I would do is explain, first off.
That to me is a fluke.
It's fluke. You got to go right at it too. You got to go right at it with the client. You got to say, look, client or with the underwriter, here's what happened. Client has never had this happen in their history of doing business. Okay.
24 years in the industry, I've never seen it or heard it.
Right. They're very frustrated by this.
Yeah.
They are in the process right now of working on this, on creating cages, motion sensors, whatever. They're going to do everything they can to make sure this never happens again. Fluke accident, and usually sometimes underwriters can look at that and be like, okay, I don't see a rash of this. I don't see this has happened 3 times in the last year.
Right.
Because we've seen that where one HVAC unit was stolen 3 times in a year.
Oh,
that happened. So then they moved it to the roof.
Right.
They did. So the underwriters understand that, right? And you got to,
Yeah.
and sometimes you put that in the cover letter,
Mhm.
and then you also call them and you talk through it with
Yeah.
them.
You say,
So
hey. I mean, is that also, and I don't really know enough about it, but it's like, is that where a situation like, let's say a portfolio, overall doesn't have, hardly any loss runs at all, but then you've got this one that has a situation like that? Like, is that when you start talking about separating something versus like,
yeah,
umbrella or, can you define some of those things for us a little bit?
you brought up one of my favorite words.
This is your favorite word?
It's one of our favorite words. So we've coined this inside McGowan. It's called strategic separation.
Okay.
So
that could be used for a lot of things.
I know, right?
Strategic separation. I like it. Let's go.
So going back to like 2015, 16, 17, you're talking about everybody had like master policies. Okay.
Right.
They had all their properties on
Yeah.
one policy because carriers would write it. They didn't care.
Wait, is master and umbrella?
Yeah.
Are those the same
umbrella
thing?
is actually the most, I guess, confused word in our business to consumers.
Yeah.
An umbrella policy is a liability policy that sits over top other liability policies. So umbrella has nothing to do with property, ever.
Okay.
So let's say your auto liability. You're driving, you hit somebody, you hurt them. That is a auto liability claim. Well, let's say you don't have enough auto liability limits to cover the damage and the bodily injury you caused.
Yeah.
You carry an umbrella that sits over top of that, which is usually $1 million, $2 million, $3 million, however tall you want to build that.
Right.
Some people like to say, I've got an umbrella policy. They think that means everything.
Yeah.
Right? And when people say that to me, I know exactly what they're talking about. Right. In the insurance business, though.
Or you know what we think we're talking about.
Correct.
Yeah.
Exactly.
Yeah.
So we look at it as a master policy would cover all of their property. So let's say you have 20 communities. 8 of them are built in the 60s. Mm-hmm. 5 of them are built in the 80s.
Yeah.
Right. And then you've got like 4 that are built in 2000 or newer.
Yeah.
That was fine, back in 16, 17. Right now, that you do not want to do that because the carrier that is willing to write the 60s and 70s and 80s,
Yeah.
Of course they'll write the 2000s.
Well, yeah.
Yeah, they love those,
course,
right?
yeah.
But they're getting a pretty high rate for everything because they're on the 60s, 70s, and 80s.
Yeah.
So what we do is, first thing we look at on an SOV is the year built. As soon as we know that, we know exactly the markets that will look at it. So since this is all we do a lot, mainly, multifamily, is that I know for a fact that if it's 1990 or after, Hartford will do it. Travelers will do it.
Okay.
Auto owners will do it if it's after 2000. Liberty Mutual will do it. But we can go to these ones, and I can look at the TIV, the total insured value, and say, okay, this is under 20 million. This is perfect for Hartford.
Yeah.
And so what we would do is we would tell that client, look, your 60s and 70s and 80s properties need to stay with this carrier, but we need to move these. And don't worry, they're not going to get mad. I mean, they may, but they're still going to stay on them because they'll write these.
Yeah.
We're going to take these and strategically separate them. We're going to place them with a carrier who's going to give you way better terms and conditions and way better premium. Way better.
Yeah.
And so then we're separating it. But also what we're doing is we're separating the older properties from the newer. If we have a bad claim on this old property, it's going to affect everything. You're all on the same policy. So a great example is I have a very large client and we have strategic separation. We have a couple of their older properties with a certain carrier. And then I've got a big policy with a bunch of their newer properties and a couple other ones. And so we had this fire the other day. And every time an apartment fire comes on the news, I'm like, oh my gosh, is it one of mine?
I was going to say, do you immediately like,
Always. I'm like, and they're all the Cedar Crest, Cedar Ridge, they're all these things. Yep. I was like, I don't know. We write so many of them. So they got this fire and I immediately sent it over to my account manager. I was traveling and I was like, hey, what carrier is this with? And I found out it was with the carrier that writes the older policies. And everyone likes a claim, and I love that carrier too, but I was glad it was the smaller portfolio and not the larger one because that one loss can affect the whole entire thing. And now all those rates are going to go up, right? Because the carrier is going to use that as ammunition. That's what they do. Yeah. Well, we've got these claims, so we've got to increase the rate, right? Yeah. So having strategic separation is very, very important. And everyone should be looking at it right now because it's the best thing that you can do. Yes, you can get a master policy and it sounds great accounting-wise and all this stuff too, but you could be saving potentially 15, 20, 25% in premium and have better terms and conditions, better deductibles.
That's huge.
It is. It's huge. Yeah. It's a lot of work though. It's a lot of work on our part. Yeah. Right? It's not really a lot of work on the client's part. It's a lot of work on our part, which we don't mind doing.
Yeah, thank you for that.
Yeah.
That's very appreciated. I think that I think that it's natural for at least my listeners to want to have some real life stories. And I didn't put a rapid fire in our outline, but I feel like it would be okay for me to do it because I also just think that you would share something. So like, are you able to, maybe just talk about like the highest dollar amount claim that you've ever had?
Yeah, so I'm actually still in it right now.
Ooh,
So I had a client, great client, and they had a driver going to one of their locations. They were actually driving in Ohio, and they blew a stop
mm,
light, and a T-boned a 72-year-old male, and he became a paraplegic after that,
okay.
which was awful,
Yes.
awful. The employee never had any issues with the employee,
Yeah.
but she tested positive for some, narcotics and things like
Something.
this too.
Yeah.
And it was very unfortunate, very unfortunate. And
Yeah.
it was a sad situation because this employee was a great employee, never had any issues, stuff like this.
Hmm.
So this employee was, go off to jail because of all this too and everything. The client we have $7 million of limit. Okay,
Yeah.
so we have a $1 million auto and a $6 million umbrella sitting over top of it. And unfortunately, the carrier offered the full seven,
Yeah.
and the plaintiff said we want 25.
Yeah.
They want 25, and
Yeah.
it's this is really hard, and this gets a little touchy here. So you got to separate this. It's
Yeah.
an awful thing that happened to this man.
It is.
It is, and if that was
Yes.
my grandfather or whatever, I would
Yeah.
be very upset, right?
Yeah.
Um, when you look at it though, from the optics, is that he's not raising anybody anymore. There's nobody relying on his income. Right? Does that make sense?
It does make sense.
And he's mainly retired, had like a little small business on the side and
Yeah.
stuff like that too. And in the history of case study in
Hmm.
Ohio,
Hmm.
a claim had never paid out more than that.
Yeah.
Not more than
More
seven.
than the seven
Yeah,
or more than the
it was like
25?
3.5.
Yeah.
Right, and it was an awful. It was a trucker that hit a lady and her kids, and there was a fatality. Right, and it
Yeah.
still didn't pay out more than that 3.5 million.
Yeah.
And so our client really didn't do anything wrong. I mean, the employee did, right? But it's like
Yes.
and so now our
Yeah.
client may be footing the bill for even a little more after that 7 months. So that's been a really hard thing, and I
Yeah.
hate that. I hate that stuff so much. It's been a really challenging thing, but
Yeah.
that's my largest liability
But that is,
claim.
I mean, I think that's the crux of our industry. Like at the end of no matter what's going on, there's a human,
Yes, it's going to have error. We're going to have
Yeah.
error, and this stuff's going to happen. And so
Yeah. Yeah.
claims, I've got claims that are just like, I mean, wild claims, and claims that are just so sad, so gut
Yeah.
wrenching.
What's the
right?
weirdest claim that ever came across your desk? Whether it was paid out or not. Like what's the like is there like a well, let's just try? Like
So, so I insured a haunted attraction,
okay.
and
This is what I'm after.
very very large
Yes.
one, and it's amazing what some of these people claim. Okay,
At the haunted house.
yeah, and I'll
Okay.
never forget this. So that one of the attractions is like a wooded area, right?
Yeah.
And this girl, so she gets scared, and they tell them,
As you do.
do not run off the path. She sprints off the path,
Oh.
right into the woods, into the dark, right?
Okay.
Trips and falls over a log,
Okay.
busts her head open,
Okay.
right? So it's
Yes.
a pretty, she's hurt and stuff like this too.
Mhm.
And then they sue, and I'll never forget my client because he's a wonderful guy. He's like, let's look at this. You pay me to scare you. I tell you rules.
Yeah.
I scare you.
Mhm.
You break rules.
Yeah.
You hurt yourself.
Right.
You sue me. Right.
Right.
It's like, it was a challenge too. But like those attractions,
Yeah.
these people know what they're doing. Like they know what they're doing. They're
Yes.
going to these inherent risks of
Yeah.
writing these things, and it's just amazing what you see people just sue for. I mean, this is what you came here to do, and our client did nothing wrong, and it
Yeah.
happens all the time.
Yeah. No negligence there. Like you
No.
can't remove a log from a woods.
Woods that you're not supposed to go to, right?
That you're not supposed to go to. Yeah.
But unfortunately, a plaintiff attorney will jump all over that stuff.
I know.
They love
I
it.
know. And it's funny. It's like, this is where, there's like a convergence. So like I volunteer for, right now for the Women's Resource Center in Greenfield, and we're having a talent show.
Okay.
And it feels very unassuming in many, many ways, just inviting local performers and, people can donate to vote, but also there will be like an actual winner or whatever. It just feels so lighthearted and fun and all for the greater good and a great organization. And at the committee meetings, like we have to set aside time to talk about insurance waivers, insurance period. Is there enough insurance? Does the theater have enough insurance? Do we have an organization have enough insurance? Like what happens if this,
Yeah.
and like, it's, I hate to say it's just like such a downer.
It's a huge downer.
It is such a huge downer
Yeah.
because, you do have to ask yourself, like if someone decides to tap dance as their talent and, they're walking up the steps to the stage, like it's a really old restored theater and they have substantial steps and they have a handrail, but like tap shoes are kind of slippery by nature. So it's like we have to ask ourselves, like if someone walks up the steps and they're in tap shoes and they fall and they hurt themselves, like what role do we, truly play? Can we protect ourselves? Do we tell them, well, don't put your tap shoes on until you get in the back? It doesn't seem reasonable. And also just the fact that we have those conversations
it is a downer.
It's wild. Yeah.
It's a necessity, right?
Yeah.
And, people will say things like, oh, well, they would never do that. They would never sue us. We're like, I'm telling you, like when people get hurt.
Yes.
And all of a sudden now they can't work or they can't do something. I mean, and an attorney gets into their ear, starts having conversations. Yeah. Things will happen that you never expected.
Do you feel like, I feel this way, but like corporations or companies or company vehicles and things like that, do you feel like they are targets for litigious people?
Oh, absolutely.
Yeah.
Absolutely. So there's something on your policy called MedPay. You'll see it. It's called medical expense or medical payments. Okay. It'll be like,
I think that I've had to use it.
It'll be like $5,000 or $10,000.
Yeah.
It's a general liability. Okay. So it's for third parties on your property, right?
Yeah.
Not employees, just third parties. That's you don't have to prove negligence. It's nuisance coverage, right?
Right.
So someone comes on the property, they slip and fall and hurt themselves. The carrier cuts them a check. They sign a letter that they're not going to sue, and they go about their merry way.
Yeah.
Right? What we'll see is a place that has a lot of foot traffic. Mm-hmm. We'll get their loss runs sometimes. Yeah. And we'll see 5,000. We'll see 20 of them.
Pay.
Well, what will happen is a local attorney will know there's $5,000 available every time, no matter what. Whether it was a $500, they went down to the med check and it was $500. There's $5,000 available, and so they will just start going after that organization. And then, honestly, what we actually recommend is to exclude MedPay at that point. Well, say exclude it and prove we're negligent, and then they gotta file a suit. And our carrier will start defending. And it makes it much more difficult. Right. Them. So some people say, well, we can't exclude that. It's like, actually, it's not a bad idea.
You could,
Yes, then a lot of that stuff's going to go away. Because the plaintiff attorneys will be like, well, it's not a free $5,000 every time. No. They're going to say, we got to work for this, and we may not even get it.
And that's different.
And it's only $5,000, right? So then they just don't try.
I can remember using it. We had a community that had a grocery store, parking garage, and then the apartments attached to it. There are, all these mixed use developments have so many layers. Oh, yeah. So many layers. And there was an older person, early 80s, that, like you said earlier, sometimes things happen, didn't have anything to do with us. And she fell on the curb. Curb is painted, curb is marked. This place was a shiny penny, like it was fresh, if you will. And, she refused medical attention. She didn't think that she needed it, but the ambulance apparently has responsibilities based on age. So because this person was of a certain age, they had to take them. Oh, gotcha. It wasn't like whatever their responsibilities are. Sure. They didn't have a choice, even though she was articulating choice. Mm-hmm. And so they did end up with this bill, and it happened on our property. And we didn't do anything wrong, but I think that we used MedPay probably more just in goodwill. And so this older couple, didn't have some financial impact for something that just happened to happen. Yes. And we had the ability to also, so
that's the great part of that coverage, because
it felt right.
It's a good right,
and
fair.
It is
a goodwill payment. It really is.
Yeah, that one felt good, right, and fair. I had another one though, also involving a grocery. I just think the nature of it is like, because it's such a consistent. Yeah. There's always someone going. You have to go to the grocery. You have to go a lot. It's not like other things that you go quarterly or whatever. But I remember in that situation, we were the property owner, but gets tricky when you've got retail and those tenants, and then you've got this major like anchor retail, whatever. Mm-hmm. But I read the reports afterwards. This happened before I started at that company. The treatment for this person's injury was a Band-Aid.
Okay.
That was the treatment.
Uh-huh.
So that was, what was administered in the ambulance or with, EMTs. That was the treatment. But that attorney went for it.
Oh, yeah.
Went for it, like was in it for the long haul. And if I remember right, I think jury trial, like it was either headed that way, whatever, 6 figures.
Mm-hmm.
6 figures.
I know.
And I was like, are you kidding me?
Mm-hmm.
And maybe in the end, that was the lesser cost, like as it relates to defending, versus settling. Like that's a whole nother world.
Yeah.
That's why my daughter's looking at going to law school. No, not for that. Not for that. But either way, I just remember being like, it is kind of astounding. And I'm not saying like humanity by nature is always just trying to suck something out of us. Right. But we are no different than anyone else.
Yeah.
That we are subject to, remembering the times where, something was good, right, and fair. And when something is just like, absolutely not, you've got to be kidding me, and I was really close to, not in that case, but I mean, I've always been really close to the claims adjusters and like, how do you prove it and what's evidence look like and what did we do and what did they do? I mean, one thing we did do one time, not one time, but have done in the past, like there was a major event, snow event coming, an ice event. It was going to be over the course of multiple days. And we communicated with our residents. We specifically told them, what our policy is, how this will go, what order we're going to,
That's
tackle
awesome.
these issues. Like we were very specific about handicap spots, common spaces, then this, then this, then this. Specifically talked about just even areas like we identified and vocalized the risks. No different than you just said, like Indiana, just like we have this inherent risk, but we specifically communicated multiple days in a row about temperatures, about snowfall, about what we're capable of. I mean, we're still only just capable of so much.
That's risk management. So like all I'm thinking right now is like, I want to tell the underwriter that. Like that's what I'm saying. Like
it was probably my best written letter ever in life. That turned out to be something crucial when we had we even told people there was a slope in that parking lot, and we specifically said, to the extent possible, park in these spots. This is just by geography going to pool water, going to pool ice, and the temperatures are too cold for it to be able to be fully mitigated. Do not park there. So we didn't mark it off per se but we made the risk known, and this person parked there anyway, got out and slipped. And because we had all of that very specific language for that specific event. I remember it kept coming up like, you did this for this event or you did it in a general sense. We did it for the event.
Right.
And
so that's risk management at its finest. Right.
Yeah.
You're mitigating everything before something was to happen. And that letter should be shared with your underwriter, 100%. I mean, to say, look what they're doing for this single event.
Right.
They're not just saying wing it and figure it out. They're actually, they're taking their time.
Not.
And, you talk about, when you were talking about, what's our faith in humanity? And so what we're seeing now is that hard market on the property side is starting to calm, but we're seeing more of a harder market in the liability side because we're seeing what's called nuclear verdicts. So
nuclear verdicts.
Yeah, it's social inflation. Okay. So what's happening is that these juries are very empathetic, which we get it.
Sure.
And they see an insurance carrier, big dollars, they're awarding them whatever they want. They're awarding them policy limits. And so the carriers are starting to see, like, if we get to a jury, like we know, like what this does, it doesn't look good. And so that's why liability limits our premiums are going up. And we're seeing carriers pull back on their umbrella capacity. So certain carriers, let's say you had a property, Cedar Crest, and you said, I want a $5 million umbrella. Back in the day, a carrier would be like, not a problem, $5 million. Now we're seeing carriers go, we're only willing to offer 2. So then we have to go build a tower. So we have to go find an XS3 of 2, right? We go find someone else to jump in and we layer it, right?
Yeah.
That's becoming popular because they know if this was to be a bad claim, they'd be on the hook for the entire thing. So that's a social inflation that we're seeing significantly hard.
So they're just assuming like max policy.
Yes.
Whereas before, maybe that was, I don't want to call it a gamble, but maybe it just didn't happen all the time.
Yeah, they could get it settled for something that they felt was reasonable and take care of the person, and it was, it was fair for everybody involved. Right. Now we're seeing nuclear. That's what they're calling them, nuclear verdicts.
Where does that phrase? Do you know where that phrase comes from? That's just what we
call
it because it feels like a nuclear explosion, can't recover kind of thing. Oh man, in 1997, I got in a car accident, and there was a semi driver that had pulled into a private residence. He had like a loader, like a long flatbed, basically, and a tractor on top of this long flatbed.
Oh my goodness.
So he pulls in, and we believe now, or at least at the time, that there was a Camaro that was parked in the way to where he couldn't pull in all the way off the road. So he gets out of his vehicle, goes inside the house, talks to whomever it is that he's, intending to talk to. And we like to think that in the process of like, hey, move the Camaro because, I'm in the road. And what happened was there was an off-duty police officer that had driven on that road, noticed that he was out in the roadway, the back end, called it in and said like, hey, maybe an officer needs to come out here. There's no triangles, there's no flares, like whatever those responsibilities are for a CDL driver. And that was 4 minutes before my accident was called in. I ran right into it.
Oh gosh.
Ran right into it. I mean, it was like 6:45 p.m. in January, dark, very dark already. Yeah. Car coming this way. By the time I saw it, I just hit it, probably going about 45 mile an hour. Man. That was what the estimate was. Snapped my femur. So I've only broken one bone in my body, and it's the biggest one. Yay. Yay me. And I recovered clearly, and I'm fine, and immediately attorneys involved, obviously, because you've got to see someone with their CDL. What did this look like? What was this like? They were claiming that I hit the tractor so hard that it bounced over and damaged this old Camaro. Like they wanted, it became very interesting.
Sure.
I remember the officer coming to my house after I'd been through surgeries and stuff and saying like, oh, well, you're going to be ticketed for a short clear distance. And I was like, okay. And I remember I was home alone. I was 17.
Oh, I'm probably so upset.
I called my mom and I'm like, Ma, well, I also got a seatbelt ticket. Lesson learned, and always wear it now, obviously. But, just going through that process, and this was in Ohio. And I think my mom was just trying to say like, let's do what we can to make this right. You can't really ever, and not like it was a big deal. I recognize how lucky I am, but
sure.
Missed cheerleading and missed some of those other things that she had seen me like love, and, in the end they said, well, the formula for this is your medical bills times 3. And, obviously I was just like a kid at the time, and my mom was just like, oh, okay. And she was pretty much a single mom and teacher also. I know exactly where you're coming from.
Yeah.
And then later in life, not even that much later in life, maybe 3 or 4 years later, I was in college and talking to somebody's mom who worked for, a law firm. And she was like, oh, you should have got max policy. You should have got, and I don't think she meant it in a way where she was like criticizing like our process or
sure.
whatever. And I just remember thinking to myself, but really, I'm fine. I'm out here thriving. Been walking since, whenever they let me walk after that. I did end up getting the rod taken back out like a year later. So I missed a few things then. But I mean, I just remember like perspective. I was like, I'm fine.
Yeah.
I don't necessarily think that $1 million was, that I was due that,
right.
if that makes makes sense. And I'm not diminishing, like anything like the situation that you were talking about earlier.
Sure.
Incredibly different. But if my treatment is a Band-Aid, because I wore flip-flops to the grocery that day and
right.
I tripped on on something or whatever, like, do I?
Yeah.
I don't know.
It comes down to what's fair, right? Like what's
good, right,
what's
and fair.
Right?
Yeah.
And that's why the insurance is there. And people,
yeah.
when you buy auto insurance,
yeah.
people think they buy it for themselves. You're actually not doing it. When you buy auto insurance, you're buying it to protect other people.
Yeah.
If you think about that, like when
yeah.
an auto accident, if you wrecked your car today,
yeah.
and you got nothing for it, it was totaled.
Yeah.
It probably wouldn't bankrupt you, right? It would be very frustrating, and you have this. If you had a loan on it or whatever, it would be very frustrating. But if you hit somebody and gave them a traumatic brain injury or something, I guess, and you couldn't pay for that, that will bankrupt you. But that's why insurance is to protect other people. Right? So
from you.
Yeah, from you, right? That's really what it's about.
Or from circumstance.
We don't really think about it that way. All we think about is, my car going to be fixed, right? That's the least of your worries. Believe me. You get into a claim like that too. So, but yeah, and the insurance is there to take care of people for that too, but to do it on a fair way.
Yeah, as fair as we possibly can.
I'm sorry you went through that. I didn't know that.
Oh, totally fine. Honestly, like, and I think it's like my outlook, like you said, like you're such a positive person. Like I am too. And like I met one of the EMTs later. I did get to take a helicopter ride. And I think I have a good sense of humor. And so they all talked about how even during that, just like I was just engaging with them as human beings and doing the only thing that I, know to do, which is like laugh a little or make a joke or something like that. Like in the ambulance, they cut my varsity jacket off.
Oh,
And I remember I was just like, are you for real? Like I just got that, or whatever. And I just joking about a little bit. And I had just, I come from a family where if you wanted Nike shoes, versus whatever, was affordable, you had to pay for half of it, like
Sure.
find a way. Right.
Yep.
And so I just remember I had these Nike Air Max Triaxes that were like so popular. They were purple and teal, just god awful, very, very 90s. Yay. But I paid for half of them.
Yeah,
And so
meant a
I'm
lot
at
to
the
you.
hospital, at the first hospital, and they were going to cut those off. And I was like, absolutely not. I was like, I paid for half of those. They're fine. I was just like, I will breathe deep and we will pull
Yeah,
this
take
off.
these off.
Yeah. I mean, my right leg literally looks like
Oh,
a
gosh.
zigzag, and I
Oh.
made them take my shoe off because I paid
Oh,
for
I
half
love
of it.
that. I love that.
And then, I mean, I guess being the person that I am afterwards, I sold my varsity jacket that was cut up to the driver's ed school.
Oh my gosh.
So that way they could like lay it on the table and make it very real, like
yeah.
what it's like to operate this heavy equipment out
That's
there.
smart. That's
I
smart.
know. And my little brother one time was in the class and he was just like, he like leaned over and he was like, that's my sister's and she's fine. Like he diminished all of it. But
That's
anyway, I
awesome.
know it's really weird. I digress. Strange conversation, but I think a good one. Well, Eric, I want people to know how they can contact you. I definitely think that I've never talked to anybody so passionate about it, but also so for the client. So just incredibly like, we can do this. And then I also just think like honesty, no matter what, I know exactly what you're telling me is exactly how it is. And I think people in sales capacities and sales leadership aren't always viewed that way. You know what I mean? Like where it's always just like there's a motive and like your motives are out there just like ours are. We want to sell you an apartment. We want to lease you an apartment. We
Yep.
also want to do it with integrity and make it the best we can for you. And I just so much appreciate it. So if you just had to give one wrap up piece of advice to multifamily owners specifically, what is it?
I just think everyone needs to be very intentional in the insurance process. It is not the days of just write a policy. I'll see you next year at renewal. Like
Yeah.
that is not going to get you where you need to be. There is a ton of strategy that needs to be involved, a ton of sit down that needs to be involved. Talking through things, your agent understanding everything. How can they advocate for you? How can they fight for you? So I tell all of our salespeople, I say, the person who educates the client the most is usually the one that wins.
I agree wholeheartedly.
All the time, right? And that's all I want to do.
Teach us something.
Yeah, I want to educate the clients, and your clients have to know that you always have their best interest at heart. Always. If you can do that, you'll have a client for life, a relationship for life, because they'll know no matter what, the hard market, whatever, I know that Eric is out there working for me and he has my best interest at heart. So that comes from a relationship, right? And how is that relationship built? Spending time together, not talking about insurance. Like you can ask, Sandy Carmen, right?
Yes.
Ask Sandy. Like her and Tim will go to lunch at the Cheesecake Factory, and I think we'll talk about insurance for like 10 minutes.
Okay.
Right? And then we'll just talk about family and life and everything else after that, right? Because relationships matter, right?
Yeah.
A good friend of mine, Quinn Ricker, it's one of his core values in his company is relationships matter, and they really, really do. And so I think spending time being intentional in that relationship.
Yeah.
And insurance can be fun. I know it sounds weird, but it can be a little more interesting than we think it is,
I think it's very interesting. Also, I think part of it is it makes us nervous. Like we don't know. We are using words that we don't actually know what they are, and maybe there's some books out there. It's like, I think what I end up reading, I'm an avid just voracious reader. It's usually more like sociology, psychology, human behavior, a lot of that AI. Like I have a pattern and, I go on these like micro journeys, I call them, but I probably need to go on a micro journey about insurance, just sort of like even history. Like I end up liking the history. Like I read something about the history of banking and I probably need to do that for insurance too. I do think it's interesting. I think it's hard to get over the hump of the fear of not knowing what you're talking about, not knowing the words, and just saying to an Eric Rich, like, can you teach me?
Yes. That's why everybody avoids it. I mean, right. If you don't
Yeah,
understand
we do
something,
avoid what we don't
yeah,
understand.
then we're like, I don't like that, right? Because I just don't
Yeah,
understand
it's
it.
uncomfortable.
And I always tell people, like my clients, like, I don't need you to understand all of this. I need you to understand that I understand it. And that I
Yeah.
will make sure that you're educated as much as you want.
Yeah.
Right? Like, because it's impossible to understand it. I've been in this for 16 years and I'm still learning every single day.
Yeah.
Right? And you guys are in multifamily. So, like,
Yeah.
unless you decide to switch and change and work for the insurance agency tomorrow, you're not.
Don't see that.
That's right. That's right. I question it myself sometimes.
Yeah, no, I value that. I value that you do it, but I love what I do. But I like when our worlds converge. And I would say that, lucky am I that I've been in positions and roles where, I would maybe be talking to an attorney or talking to a claims adjuster or talking to anybody in that realm. And I've always, before they get off the phone, I'm like, okay, but why? Or just like a couple extra open-ended questions with those humans. They, first of all, I don't think people ask them a lot of times. Like, I think everybody is so busy. Their days are full. We say we don't say busy. We say full. Our days are full.
I like that.
Yeah, I like it too. I think busy has some like implication of non-producing, possibly. I'm not saying that people that say they're busy aren't. I'm saying we've retrained our language in my team. We say my days are full.
I like that. Just like I don't like quote, I like solution. I'm
right.
Sure I might start using that.
Let's just start writing our little isms down.
Yeah.
But I just, I think in those moments, I don't know, like just from a learning perspective, we do get nervous. We don't know what we're talking about. We do want someone to teach us. We do want to trust someone with it. Like, I do think we want to know enough.
Yeah.
But we don't have to know all of it. But if I have an expert in front of me, the first thing that I'll make sure I do is like ask another question, because not as a competitive, advantage, I guess, over the person that just said, okay, we'll do that and hang it up. But when they tell me like, we need to do this, I'll say why. And I've gotten fantastic explanations. I've gotten other ideas with how we can do better on mitigating losses in those moments, So it's like, that's also just for young people or not young people,
Ask
all
questions.
people. Like if you just say, wait, am I using the term umbrella right? Like, just say it and be like humble and be okay with being, humble. I think that's what makes me nervous about like the kids. And I say kids meaning like my own, is their, because of the magnifying glass that they've grown up in, and because of that, fear to have something be just like publicly known that they don't know, I think it actually puts them at a horrible disadvantage, because it's harder for them to just be like, I have no idea what you're talking about.
Yeah.
Can you please explain that to me? But it's like a good thing to practice saying, I have no idea what you're talking about. Can you please explain it to me?
Questions are so important. You can ask my mom, my 10th grade algebra teacher. We went to the parent-teacher conference, whatever, and she said to my mom, he asks a lot of questions.
Oh, really?
I'll never forget that. And it's like, well, I want to know what's going on. You know? And like in the insurance, I'm asking questions.
So you've
all the
always
time.
been this.
Oh.
This is like you to your core.
I want to understand so that I can understand, but also like I want to understand so I can educate. So I'm asking underwriters questions all the time too. I was like, well, help me understand this, because I have to communicate this to my client, and I need to know what everything that's going on in this too, because the underwriters, they don't understand. They don't speak to clients, right? They speak to insurance people every day. And I tell them we're speaking to people who don't know insurance every day. It's different, right? So we got to be able to educate them.
I like that. I like the distillation, like here to here, and then here to here.
Yes.
And we can all know what we need to know in that realm. But I just appreciate that so much. Well, thank you so much for joining. I have your website listed here. It's McGowan.insgrp.com. So McGowan Insurance Group. This is Eric Rich. You have made insurance fun today.
Awesome.
You did a great job, and we so appreciate it. And also just appreciate your dedication to the industry, knowing what you know, being very specific and intentional about multifamily, about HAB.
I love it.
I think it's just anytime that we can find somebody that's one of us, that's not on the opposite side of the table, is really nice. So thank you so much. And thank you for listening.
Awesome. Thank you.